The next general journal transaction is donating stock for advertising. So this seems like quite an unusual transaction, but it's quite common in VCE accounting. And what it is the business might donate stock, say, to a local school for its fete, maybe to the local footy team, to a trade show, or it could even be for an in-store display. So for instance, if we were selling our stock in JB Hi-Fi and they want a display model, well, we might donate that to them. What we're going to do is call that advertising. In any of these situations, even if it's a donation to a charity, we're going to assume that's advertising, and therefore it's an expense. Why is it an expense? Well, we need to go to the definition again. It's either going to be an outflow of economic benefits or a reduction in inflows. It's either going to decrease assets or increase liabilities, and it's ultimately going to make owner's equity go down. So comparing it to, say, wages expense, which was quite simple, that was one where there was an outflow of economic benefits, and the outflow was assuming we paid it, it would be cash. In this case, an asset would decrease, which would be the cash at bank asset. And lastly, owner's equity would go down. When we donate stock, it's a little bit different. There is an outflow of economic benefits, but it's not cash. What's leaving the business is the stock that's being donated. The asset that decreases isn't cash at bank, it'll be stock. However, the similarity will be owner's equity will decrease, which therefore makes it an expense. So in this case, on July 3rd, a sports store donated 2 footies, which cost a total of $100 plus GST, to a local school for their annual fete in exchange for putting up the firm's banner. So we're getting some advertising out of this. So we've donated the 2 footies to the local school. And again, we need to look at the issue of cost price. Do we record this at a cost price of 100 or the GST inclusive amount of 110? Well, the $10 GST has already been paid by the firm, so we don't need to account for that. It's already been done. So what we'll do is just record this donation or advertising at $100 as the cost price. So that's going to go in our general journal. That's going to go on the actual date, which is July the 3rd. Advertising is an expense, so when expenses go up, that's a debit. Stock's going down, so that's a credit. And we have a narration. We'll look at this in chapter 9. We want to get quite detailed with the narration in terms of what stock is and how many units. For now, we'll just keep it quite simple. Stock donated for advertising purposes to local school, and we'll put in the memo number. Now I need to post that. So we've got here a debit to advertising because it's an expense. It's going up on the debit side, and stock is going down, so that's a credit to an asset. Enter the transaction on the actual date in the journal, and in the general ledger, always recording these things on the last day of the period.